There has been a lot said about economic recoveries that followed the pandemic. A lot of examples, a lot of do's, and an equally larger number of don'ts have emerged. India, however, has stood out due to its custom-made, capacity-enhancing push that not only enabled us to script an unbelievable recovery, but has actually allowed us to beat pre-pandemic levels in many contexts. Hello and welcome to New India Junction. I am Richa Dwivedi, and today let's try and decipher how and why we managed to cushion the economic impact of this once-in-a-century pandemic. First off, when the COVID-19 pandemic hit us, armchair economists pressured India immensely to begin handing out transfers, like many developed nations. But we know that India chose a non-conventional route. Instead of simply printing money and offering handouts, the Atmanirbhar Bharat packages focused on capacity building. We know that the Prime Minister Narendra Modi-led government adopted the Antyodaya approach. That is, they protected those that were the most vulnerable. But how? Simple. At a time when the nation locked down, the government ensured food security and sources of income for the nation's poorest. Critical healthcare infrastructure was ramped up at lightning speed at a time when we needed it the most. And most importantly, Prime Minister Modi himself led from the front in inculcating and supporting a positive attitude throughout India's scientific community. This allowed us to develop vaccines and vaccinate over 1 billion Indians since January. The result? India not just weathered the economic storm, it came back stronger. A recent analysis by Ruchir Sharma, chief global strategist for Morgan Stanley, pointed out that big spenders fared much worse during the peak of the pandemic compared to those that spent wisely and spread their stimulus over a period of time. But that's a little vague, isn't it? Let's look more closely at three important facets. Inflation, because we weren't recklessly handing out cash transfers and encouraging overspending. India's retail inflation for September is at 4.35%. The average for heavy spenders is 5%, and these headlines should tell you the rest. Interest rates in India have dropped by 1% since January 2020. This marks the continuing trend that has resulted in a 4% drop since 2014. How are we looking globally? After the first lockdown in March 2020, the rupee has actually held steady against the US dollar at 75.2. And the government? How has it fared? Well, the estimates predict that the already ambitious tax collection targets may be overshot by 10%. Put this all together and it's easier to understand the record GDP growth at 20.1% in the first quarter of the financial year. Global agencies like the World Bank and the IMF predict a growth of 9 to 10% for this financial year. This puts India's GDP growth at almost twice the global average and double that of the USA. This growth story is of course supported by India's robust rural economy that continued its growth despite the pandemic and the lockdowns. Minimum support prices and procurement have both touched record highs. Tractors and two-wheelers demand is higher than pre-pandemic levels, testament to rural economic prosperity. And finally, let's not forget industries. Some say that India did not become Atmanirbhar, but with an industrial production index at 100% more than the August 2019 value, it seems someone is mistaken, because the numbers clearly are not. Even electricity demand, a frequency indicator for industrial activity, was at its highest ever during April-September 2021. Similarly, the Purchasing Managers Index services have consistently recorded values over 50, indicating a resurgent services sector as well. The Google Mobility Report that measures the retail sector and compares them with January to February 2020 data has actually turned positive. This means the retail sector, be it recreation, grocery, pharmacies, parks, or places of work, are back to pre-pandemic levels. Which brings us to a question many have asked, that is jobs. Here the IT sector has emerged as the star. The hiring levels for the IT sector are up by 138%. For hospitality sector, they are up by 82%. And even retail, that bore the brunt of the lockdowns, has increased its hirings by 70%. Similarly, hirings for the education sector are up by 53%, for the banking and finance sector by 43%, and for the telecom sector by 37%. The combined rankings therefore put the unemployment rate at 6.9%, and that's actually lower than the pre-pandemic level. We can of course take nothing away from India's startups. They have actually made India the unicorn nation. Just in 2021 alone, 33 new startups crossed the $1 billion valuation, and there are still 2 months to go. Moreover, the Employee Provident Fund has witnessed millions of additions, indicating a heightened number of formal jobs being created. And how can we forget digital payments? The India-made and India-fueled success story like none other. We recorded over 3.75 billion transactions worth over rupees 6 trillion in September. That's the highest in the world. So how does all this look in real life? A USA-based firm called Jefferies has pointed out that the realty and housing sector is witnessing a surge after 7 years. It further forecasts a rising demand from here on out. Gross non-performing assets for the banking sector have moved down from 12% to just 7%. The reforms by Prime Minister Modi-led government, like the new insolvency and bankruptcy code, have made it easier to do business and pay up. Given these futuristic reforms, a heightened ease of doing business, companies have used the last 6 years to deleverage. The debt-equity ratio has reduced to 0.7 times, making room for further growth. The net corporate profitability has also risen to 51% between financial year 20 to 22, from a poor 0.4% between financial year 11 and 20. A further 15% increase is also forecasted between financial year 22 and 24. This heightened activity has also allowed room for capital expenditure, and the Modi government is leaving no stone unturned to create infrastructure that is better, stronger, and for the future. With the $1.4 trillion Gati Shakti plan for the next 5 years and the close to $9 billion Ayushman Bharat Health Infra mission, India is all set for one of the biggest capex push it has ever seen. And finally, since we have established that numbers do not lie, what is it that they tell us about this growth story? The BSE Index has doubled from 29,000 in June 2020 to 61,000 now. Annual FPI investment in Indian equity has been at its highest in 2020 and 21, with an approximate total of $34 million. Exports in September 2021 have closed in on $34 million, with engineering goods, petroleum products, and handloom grossing the highest shares. Is this not proof of concept? Does this not show us that India is not just Atmanirbhar, but also the trendsetter? Do we need any more evidence that not only is the government proactive in its decisions, but it is also well acquainted with what our nation needs? At a time when economies were threatened with one collapse after another, India managed to paint a picture that's not just rosy, but may very well serve as the inspiration for emerging economies globally. All this could never have been achieved without a leadership that was committed, an economy that was willing to respond, and a people that believed. Keep watching New India Junction for more insightful videos on India's economy, international relations, traditions, and lifestyle. Dhanyavad and Namaste.